Yeah, Jim, it's a good place to start. Sort of the behavior of a few of these names, which we've been talking about the last couple of weeks. I mentioned David Kostin's note over the weekend. Pockets of the market have recently appeared to demonstrate investor behavior consistent with bubble-like sentiment. They point to SPACs and then high growth, high multiple names with EV sales above 20 are now a quarter of volume.
Well, I love David Kostin, and he's terrific. And he does point out the SPAC. Let's say festival. There were 3 today. They all seem legit. They always seem to have something going that involves, let's say, EV or healthcare that are hard to pin down. But we are seeing a phenomenon that I have never seen, and that is the phenomena of, David, you're not necessarily going to like this.
Tell me.
It's the Wall Street bets people, and they have ganged up. And arguably, it's allowed by free speech purposes to center on a few stocks. GameStop, and arguably the reason why they're in it is because this fellow Ryan Cohen, who look, Ryan did a great job on spot. Oh, he did a great job on Chewy. So people get very excited. He bought a lot of stock at 8, almost 15%. He joined the board last week. That makes people excited.
Right.
But what's most important, David, is it's concerted, but it may be protected by free speech. And this is the paradigm. You're going to see it for Bed Bath & Beyond, using a loop upgrade. You're going to see it for Adam Aaron's company, AMC. They're going to go after that one. Now, David,
I've seen it. I'm already seeing it. And, Jim, I do feel like we've seen some of this movie before. I mean, it does have reminiscence for me, certainly of the late 90s. In particular, the vitriol of some people if you challenge their established belief in any way. And the ability to coordinate in some way, even though they're not necessarily coordinating. I mean, what's going on in GameStop right now conceivably could take a couple of firms out, hedge funds, if they were stupid enough to be shorted all the way.
And option sellers.
And option sellers, because of the fundamentals here. I mean, you had a downgrade of it at 65 by Dana Telsey, who pointed out it was trading already at 33 times enterprise value over EBITDA. 33 times for a retailer. By the way, a retailer that many would argue is not particularly well positioned, Jim. Now, that's a fundamental debate that everybody's certainly welcome to have. But what's going on now is a bit different than that, and not to mention the things you brought up on Friday involving the short seller Andrew Left and the threats that he had gotten as well.
Look, this is one of the situations. The early morning action is looking to be forced covering. And that's from the short calls that were exercised on Friday, and there's no stock around. Open interest in this one in the 60s, it's insane. I want to thank my friend Tim Collins, who does option work on this. And there is...
But you can borrow. The borrow's easy. And it's 140%, 44% short.
The borrow is easy, but the mechanics are rather shocking. And, Carl, what I think is happening, I disagree with David that is reminiscent in the 90s.
Okay.
From the point of view of it's not necessarily froth here. It's the mechanics of the market are breaking down because it's arguable that these people are all one group. But my securities lawyer said, listen, free speech covers it. So you can have cheerleaders buy. It's no different, Carl, than an analyst saying, listen, buy GameStop, it's going to 200. So I think it's protected speech. I do believe that, yes, like David says, there are going to be companies that can't get through this. But it is Wall Street bets. It's worth going to the site because it's incredibly compelling. You'll see what they're saying. You may think it's froth, but they're using arguments that they think hold up under scrutiny. I don't think they do, but it doesn't matter what I think.
Well, the stocks have 581% in 3 months. Sorry, Carl, go ahead.
No, Jim, I guess the question for those who are not in these particular names is how much risk is there to broader pockets of the market? It's not just about SPACs or high growth, high multiple. B of A is out today saying that companies that are beating on estimates are being punished in ways we've not seen since Q2 of 2000, right before the S&P went down 13% in a matter of weeks.
Well, what I would point out is that, again, I love David and what David Kostin was saying about high-growth stocks. That's not what's going on. What's going on is that the Wall Street bet people are looking at what the high short interest is, whether it be the short interest in GameStop, whether it be the short interest in Bed Bath & Beyond, the short interest in AMC. And what they're saying is there's no way that people can cover the 67% that's short Bed Bath & Beyond. Loop Capital comes out this morning and raises price target. David, they are not. They are being very specific to break the shorts.
Yes.
Shepard Smith here. Thanks for watching CNBC on YouTube.